This lesson is a demonstration exercise to still illustrate how to record business transactions in a journal utilizing T accounts. Please print out the document Ryan's Tree Trimming Incorporated within the student worksheet folder before continuing with this lesson. Let's begin by looking at what a journal looks like. This is a journal. You will notice that you have a place for the date, a place for the title of the account, a place to put your debit, and a place to put your credit. Next, let's look at the part of our problem where we're going to be dealing with T accounts. T accounts can also serve as a general ledger. In this case, we're looking at T accounts for assets, cash, accounts receivable, and supplies. All asset accounts have a normal debit balance. So the normal balance for cash is a debit, the normal balance for accounts receivable is a debit, and the normal balance for supplies is a debit. Continuing with our T accounts, we have equipment and accounts payable. Equipment is an asset account with a debit balance, while accounts payable is a liability account with a normal credit balance. We have a few more T accounts for this problem. We have revenue, or service revenue, advertising expense, wage expense, gasoline expense, common stock, and dividends. Service revenue is a revenue account with a normal credit balance. Advertising expense is an expense account with a normal debit balance. Wage expense, an expense account with a normal debit balance. Gasoline expense is also an expense account with a normal debit balance. Common stock and dividends are equity accounts. The normal balance for equity accounts is a credit. The normal balance for a dividend account, however, is a debit. A dividend account is a contra account. Contra meaning opposite of normal. Taking a look at number 1, the problem reads, Ryan Langford began a tree trimming business in April by depositing $5,000 in a business bank account. What are the two accounts we are going to use? We're going to use cash and the other account we're going to use is common stock. It's an equity account. The company is receiving cash from Ryan, and the company is going to be increasing their cash. Cash is an asset account, and assets have a normal debit balance, and the normal balance is the side that increases. Therefore, we're having a debit to cash for $5,000. The company is issuing common stock or ownership to Ryan in the amount of $5,000. Therefore, our equity account, common stock, is increasing. And common stock normal balance is a credit, which means it's going to increase on the credit side. So we're going to credit common stock for $5,000. We've now entered this information into a T account, and we can write it in our journal. We don't have a date, so for the date I'm going to write a number 1. On the first line, I'm going to use 2 because this pen is big. I'm going to write cash. Notice that I am keeping cash right here next to this line. Debits are always written first and always written next to that line. My cash amount is a debit, so that's going to go in this column right here, and it's going to be for $5,000. The next line is our credit. Our credits are indented, and then we would write common stock. Since I increased the credit line That's indicating it's going to move over to this credit column here, and I'm going to write in $5,000. Number 2, purchased chainsaws and other trimming equipment on account, $3,000. We have to break down what this is telling us. It's saying that he purchased some big items which would fall into equipment, an asset account, and asset accounts have what kind of balance? Debit, correct. And he purchased them on account. When you purchase something on account, you owe someone money in the future. That's a liability, an obligation to pay later. The liability account that we use most commonly is accounts payable. And it has a credit normal balance as it is a liability account. He purchased the chainsaws and other equipment for $3,000. We are increasing our asset equipment for $3,000. That's going to be a debit to $3,000 to equipment for $3,000. We also increased our liability, and as we stated, the liabilities account have a credit balance, and we're increasing that $3,000. And our journal entry would go above, similar to our first, and we're going to label this one number 2. And our debit is to equipment. For $3,000. Notice again, here on the line, our debit, we're going to increase, or indent, for our credit to accounts payable. And our accounts payables are credit for $3,000. Number 3, paid cash for supplies, $100. Let's bring in our T accounts. Notice that I already have my cash from our first entry on there for $5,000. The question says paid cash for supplies, $100. Paid cash. Cash is an asset account with a normal debit balance. When we debit assets, we increase them. So in order to decrease an asset account, we need to credit that account. So our credit is going to be cash, $100. Supplies, also an asset account, is a debit normal balance, which means it increases on the debit side. We are putting $100 worth of supplies in our supply closet, so therefore we are increasing that asset. We're going to increase that asset account by $100. We write our journal entry. We always start with debits. We're going to write a number 3. Our debit starts on this line right here. Supplies. $100. And our credit, remember we're indenting, is for cash. Bring that down here, $100. Number 4, paid for an advertisement in a local newspaper, $85. What are the 2 accounts we're going to be using here? We paid $85, that means cash, and we paid for advertising. Well, that is a cost that we're incurring right now, so it's going to be an advertising expense. Expenses are always debits, so therefore we know that $85 is going to go into advertising expense. We paid cash for this. Anytime we pay out cash, that is a credit. It is decreasing the cash account. $85. Our journal entry, number 4, would then be advertising expense, $85. And remember, our credits are indented. Cash, $85. Number 5. Perform tree trimming services for credit customers and billed them $1,200, excuse me. What is this asking us? This is telling us and asking us to prepare an entry for a sale or a service that we performed, fees earned, revenue. Our revenue account for this problem is service revenue. The other part of this problem says, for credit customers, and billed them. What does that mean? It means that we performed a service but we're not getting paid cash. They're going to be sent a bill and will receive cash later. This is an asset to us, and it's an asset that we call accounts receivable. So the two counts that we're going to be using for this problem are accounts receivable and service revenue. We perform service and we billed the customer for $1,200. Our accounts receivable is an asset account, and assets are what kind of normal balance? Debit, that's correct. So our debit is for $1,200. Service revenue. It's a revenue account. Revenue accounts have what kind of normal balance? Credit, that is correct. And so we're going to credit our revenue account for $1,200. Continuing with number 5, we need to write our journal entry. Number 5. And our debit was to accounts receivable. We did service on account for a customer, and the amount was $1,200. And that was a service we performed, and so we have an account called service revenue. That was $1,200.